It's been a quiet week on New Zealand equity markets compared to the last few. Of course, we're encouraged by the outcome in the fight against COVID-19. We look forward in the coming weeks to more economic data emerging, as well as government policy in terms of how they move to a more stimulatory or growth orientation for the New Zealand market generally, but also the New Zealand economy. We'd also expect that in coming weeks we'll hear from companies whether they need our support in terms of recapitalisation and indeed how well they're going in restarting their business. There have been a couple of highlights this week for sure, and that comes in the announcements from Spark and A2 Milk, both of which are important stocks for your portfolio. In the case of Spark, they confirmed their earnings guidance for the full year to June, and very importantly confirmed that the dividend guidance of 25 cents per share would hold. So 25 cents on top of the about $4.45 odd share price right now means that they're going to have a dividend yield, cash dividend yield of about 5.5%, which looks very compelling to both New Zealand investors and international investors. A2 Milk as well had a positive update, so they confirmed both their revenue and earnings guidance ahead of what the market was expecting overall. It was about in line with the expectations of our analyst, Michael de Cesare, who was much more positive on the company and has been for some time. So that was well received by the market. It's been a relatively positive month to date for the New Zealand equity market, returning about 6.6%. And also the New Zealand market, by comparison to the rest of the world, is doing reasonably well, being down only 9%. This is predominantly due to the composition of the New Zealand market versus the rest of the world, where we have a much higher weight in terms of our indices from the more defensive names such as utilities, so Contact and Meridian, Mercury, etc., versus the rest of the world, which has higher weights to the more vulnerable sectors such as financials. That's particularly the case for Australia. It's fair to say that the predominance and the difference in returns between New Zealand and Australia on a year-to-date basis, which is quite marked, about 10%, Australia's 10% worse than us, is due to that index composition as opposed to the way that we've dealt with COVID-19 versus Australia. So Australians taken a more expansive approach or a more open approach to dealing with COVID-19. And it's fair to say that no one knows who's going to be right. Both countries have been successful. My suspicion would be that the more open approach to dealing with COVID-19 in Australia would lead to a faster economic recovery for Australia. And my fear, I guess, on the other side is that the very conservative approach taken by the New Zealand government will have a quite strong or severe influence on the economic rebound that we can experience in New Zealand.